Good morning, YouTube. Good morning, the main lab. It's V. It's Cowboy. We're here. It's Algo Factory Lab. And look, it's the beginner's lab. So, this is the place where you could ask if you're a newbie and you're checking out this stream and you're wondering, hey, does this Algo Factory thing work? Should I do it? The answer is a resounding yes. And it's not a get rich quick scheme. Why? Because it's going to take a lot of bloody effort on your part. It's going to take commitment on your part. But I promise you, if you go through the coursework, you immerse yourself in the class and you learn through immersion, you're going to start picking things up very, very quickly. It's going to start connecting in your brain. And the next thing you know, you're going to start taking this to really start executing trades for yourself and really starting to make a difference in your bottom line. So if you missed the last couple of classes, don't worry, don't fret. Do not fear because there's no real continuity here. We're not going lesson by lesson here. The lessons are online, algofactory.tech, when you become a member. So don't fret, okay? So it's your time. It's an open forum. You can ask your questions, and we'll answer for you. And with that being said, Cowboy, good morning. How are you?
Good. How you doing?
I'm doing good, man. Making friends with my cup of coffee, just getting into my day.
What type of coffee you doing these days?
Well, this morning I'm doing a Starbucks breakfast blend that I homebrewed. I keep switching out. I like a lot of variety in my coffee, so I don't do like flavored coffee, right?
Me either.
Unless it's like the fall season and Black Rifle Coffee Company, they make a pumpkin spice that is to die for.
You and every single suburban mom.
What? Really?
Yeah, that's like the pumpkin spice. That's how to catch a white girl.
No. Well, here's the thing, dude. It's not any pumpkin spice. It's not Dunkin' Donuts or Starbucks pumpkin. It's Black Rifle Coffee Company's pumpkin spice, which is like, I think they infused all that flavor into the roast itself. It's phenomenal. It's really good. I'm not a pumpkin spice guy. That's the crazy part, and I like this. I guess because it has more of a cinnamon. You have that allspice taste. It's not allspice. Whatever they use in baking. It's really good. Nutmeg. That's what it is. Nutmeg. It has a lot of nutmeg in it.
Yeah, that's good. I mean, I might check it out. I've never had Black Rifle. I always do. It's called Verna Street because it's super healthy and it's real tasty. They have a good flavor. Yeah, Verna. It's you can get it on Amazon. It's like organic but there's a particular one. I'll have to send you the flavor. I gotta look it up, but it's I think it's a medium roast. Yeah. And oh man, it's the best flavored coffee. There's no better flavor. So I'll fire you off.
I'll have to check this out, man.
Yeah, I'll send it to you.
What do you take your coffee with? Like with milk or cream or something like that, or?
I do the bulletproof thing.
Gotcha.
So I blend it with butter.
Nice.
Then I put a little bit of the MCT oil in it, the brain octane. I'm stuck in 2015. What can I say?
Hey, that's good stuff, bro. That's good stuff. I've just been drinking it black in the morning, and then I'll have like a bulletproof type coffee with MCT, coconut oil, and stuff around 3 p.m. But morning time I'm trying to intermittently fast. I'm going to SoCal, bro, in about like a few weeks. So.
What are you doing that for?
Just R&R, man. We fell in love with Malibu, so we go out there and just hang out Marina Del Rey, and it's really nice. And
it's nice, yeah.
There's no homeless people there.
It's getting. I don't know. I was just there for a month. You know that feeling when there's a television out in the room, but the screen is dark, so you don't know that it's on by looking at it. But you can hear it.
Yeah.
That's being in those areas for me. It's too many people all together.
Oh yeah, especially since you've been out in
the mountain area.
Yeah.
I mean, look, we got 1 million people where I live, but it's not the same. It's just. Plus, we drive there, so we drive through the area. We see just how many people are all bunched up together. It's just not the way we want to do things. But man, we miss our friends, we miss the weather, we miss the beach, and it is what it is. So let's see who we have. In. All right, a little bit of a quiet morning. Actually, we don't have as many people in our Telegram this morning as we usually. Okay, you know what? They don't usually come on till 9 anyway. Yeah. Looks like we might have some questions though. Let's see. Okay, we got Valentine just making fun. That's good. I like the jokes. Beginners, especially in our Telegram. Ask us questions. This is the time to do it for any beginner concept. We talked about last time. We went over the Forex Factory calendar, how to use that, the understanding that when there are news events and you're in a trade, especially like a short time frame trade right before a news event, we showed you how that can be dangerous. There are those who know how to trade those events, but the only people I've talked to who really know how and are consistently successful are those who they have like a lot of technology and a lot of money to run it. And they have like, they push one button to trade across 10 platforms and they're trading millions of dollars. So, for the most part, trading news, most people that I've ever dealt with or talked to lose doing that. It's a no bueno. So I guess we'll move over. We'll talk about the British pound. I had a nice little day trade yesterday. Of course, as I talked about, I don't really post the day trades, so I can find that thing. Yeah. So, but I did come across. It was a counter trend. It was on the way down. It fit the rules, and actually, I put a decent amount of money on it. And I'm gonna share the screen here in a moment. I'm just prepping it. I gotta zoom in and do all that stuff. Let's see here. It looks like we got a few people in YouTube, just a handful. Like I said, we're here to answer questions on this beginner course. So I know it's kind of a new class, not a lot of people here, so we get it. But if you're interested in trading and you're interested in building your own trading plan, aka an algorithm, and again, this is something that we want to always remind people. You don't want to be scared of the term algorithm. People hear that term and they think, supercomputers and some guy with glasses, and so you got to have this crazy formula. And I mean, that's not at all what it is. As we said yesterday, an algorithm is merely like tying your shoes is an algorithm. Driving to a certain location is an algorithm. It's not necessarily even to do with computers. It's just when certain conditions line up. Anybody who trades and is consistently profitable, even if they do it the old-fashioned way, which is how I do it mostly. I have traded with like auto traders and stuff like that, but those who trade in general and are successful are using an algorithm. I will talk about this quick trade that was a nice win yesterday. I have to actually go here really quick. Let's see if it'll allow me to bring up my old. No, that's not going to work. Basically, I had an algorithm ping right about here. And this is a Forex pair. So for those kind of new to markets, which is what most people in here are probably going to be today, Forex is where you're trading, say, the British pound against the US dollars. This particular one, there's a nickname for it called the cable. And then there's also, there's a whole bunch of pairs. I'll put them on the right here. You got the major ones, the euro, dollar, the cable, the USD JPY, which is the dollar against the yen, the dollar against the Canadian dollar, the loonie. You got the Aussie dollar, the AUD JPY, the Aussie yen, the Aussie dollar, AUD USD, the Beast GBP JPY. You got the Swissy USD CHF, which there were a lot of good trades on that in the last month or so. And then you have, I just added the EUR JPY because the spread's been pretty tight with that, and the action's been pretty decent with the euro yen. So I do want to have that on my list. But long story short, yesterday it was within like an hour or two that I made this money. Just a quick entry. So I had an algorithm ping. And I don't really share my algo, folks. So those who are in our paid group they know the basic, the most basic important aspect of my algorithm. So I did share that bit of a secret. But besides that, I don't really talk about that. I want people to build their own. However, yesterday on the live lab, which happens after this, so this goes for about 30 minutes, then we leave YouTube. And we just go straight to our Telegram live. And in that show that goes for about an hour, we actually built this small and rather decent looking algorithm, or at least we built a starting one. I would run it through a couple more filters Probably one more filter before I actually, considered it a full algorithm. But long story short, what that means is that I found a couple of indicators. This, what you're looking at, kind of is a test. There are a bunch of indicators on here. I use maybe half of them. All of that gobbledygook that you see, I don't use all that. That's, I'm always testing. I'm always kind of, I have these things up and I may or may not use them. So, most of the time I want maybe 3 indicators at the most to stack. And then, so all these items down here, these lines that you see, those are all indicators, right? These are all different mathematical formulas. And what they do is they kind of show you a trend, or they'll show you, where price might reverse, or they'll tell you, say, don't go short, don't go long. The one on the bottom here, this yellow line, has to do with volatility. So when volatility is low, you're going to see price not doing a lot, but then it does a big move, right? So indicators do a lot of different things. Even this, these little arrows and stuff, like these are all indicators that I'm kind of constantly testing. But when I trade, I use about three indicators as a whole. 4, if they're, I might have one indicator that's kind of a background indicator. So you don't want to overload your screen with indicators. This is what you're looking at as a test screen. I just want to be real careful about that. But 3 of these lined up, and so I went ahead and took the trade yesterday. And when I did, part of what allowed me to take this trade was structure, right? So what I did was I saw price was kind of ranging in this area. I'm going to draw a bigger box around where it was ranging. It kind of had this, area that price was kind of bouncing around back and forth. And it was a big enough area. There was enough profit for me to take a trade. It was maybe a 1-2, 1.2. Well, I'll show you what that means. That talks about my risk to reward ratio. It talks about how much I'm risking. So say I'm risking $100 to make 120. My minimum is 1-to-1. I do have some higher risk algorithms that are like 4-1 to 5-to-1, things like that. I see Cool Cats in. What's up, man? Morning. In the YouTube chat. So usually the way it seems to work is that the higher your risk to reward ratio, so meaning like if you're betting $100, I hate to use the word bet, I shouldn't say bet. If you're risking $100 to make 500, chances are you're having a lower hit rate, and a hit rate has to do with how often you're winning. So this one, the algorithm pinged, and I went ahead and I could have entered earlier and been a little more risky, but I waited until, I don't like the word confirmation, but I waited until, things looked pretty solid. And I entered a trade that looked like this. And my algorithms allow for a very tight stop loss. Most people use what's called an ATR, but this was my stop loss. And I took profit right about here. So the entry is actually a tad bit higher than that. So it looked pretty much like this. That's what it looked like. And, I took profit right. I mean, it was a quick trade. I was out. I made, 1.2 times my money. And it took about an hour and a half. So, I mean, it went like this real quick. So I entered right about there, and price shot up, and I went and took money. And let's just say that, my average entry of a trade was $1,000 and I made $1,038. I'm not saying that's my trade size. I'm just saying that if it was $100 and I made 138, I made a fraction of a car payment, right? If I'm putting in $100. So, and it was just a nice little quick trade, and it's, that's day trading, right? So, however, let's talk a little bit about the difference between day trading and swing trading, because most people, I think, are probably going to do swing trading. Swing trading is where you enter a trade and you exit maybe later in the week, right? A few days later, or even a day later. That's like a swing trade, and that's great because those trades, they take a while to form up. You might see it coming for a day or two, right? Like this trade, I saw coming from 9 in the morning, or even 8:30 in the morning, and I didn't enter it until about 11. So that was like 2-3 hours that I kind of waited for everything to line up. And then you can eventually hard code so that this does this while you're not watching it. There are advantages to that. There are disadvantages to that. I have a coder over in Germany who can do the work. But I'm actually interviewing a new coder who is out in South Carolina that who actually is like a PhD, and so we might have a few different options for coders for hard coding.
Nice.
But here's the thing about it: before you hard code an algorithm, before you go and do that, you're going to want to build the algorithm itself. Now you can build it from a sort of automated standpoint. What that means is that let's talk about the old-fashioned way of building a trading algorithm, right? You can build it manually, which is what I prefer to do. I like to go back. I like to test. I like to do what's called back testing. I do these kind of fake tests. Not fake tests, but I do these virtual trades. I go back in time. I use what's called the replay function, which is really, really cool. It's where I hit this, back arrow, and the charts go back in time. And then I can say, with all my algorithms up, all that gobbledygook that I've kind of made disappear, that stuff right there. Well, I can kind of look for that to line up, and then I can hit the play, and it's like the candles just keep going. I'm like, okay, now maybe according to my algorithm, there should be a trade right here. So I can enter that, and then I can see what happens, right? And then I can say, okay, this was successful, this was not successful. I can put that data down. I like to do it manually because the charts kind of talk to you after a while. You can automate backtesting if you build the strategy, and you can do that using what's called Pine Script. And this is TradingView as far as the software I'm using. So in the software that I'm using right here with all this charting and everything, there is a language for the coders out there. And that language is called TradingView. And it's, from what I'm told, it's similar to Python language. And, you can actually code your strategy in there, and you can backtest it. And that's backtesting from an automated method it's not a bad thing to do. I find that trading from a manual perspective is going to be more profitable. I've worked with auto traders before. They tend to be successful for a time, and then they are not as successful after that. And I think that has to do with market conditions changing. That works with regular trading as well. But when you're just kind of walking away and you're not paying attention to the trade and you're not paying attention to the market, if the market changes as as you're sort of not paying a strict attention, then you don't know why your trading isn't working anymore. If you're manually trading, then you kind of understand, oh, well, the general market conditions changed in this way, and that's why it's not working. So, if you're going to go ahead and build that computer program and let it trade for you as you walk away, you're still going to need to pay attention to it. But the beauty is it can trade overnight for you. It can trade while you're not there. You can put it on, multiple assets at a time. But again, the manual trading it's just going to help, at least for me, it helps me build my algorithms to a much more refined manner. So, but the swing trading, the day trading versus swing trading is cool, right? So basically, okay, I can sit in front of a computer all day. I can do this. I can be involved. I can push buttons. A lot of people are working. A lot of people are, we got one guy who drives a truck like 12, 14 hours a day, committed to trading. Just a total badass. We got another guy in our group who is, he's got a wife and kids and a family and, and a job and all that, and still is committed to doing this, right? So what a swing trade allows one to do is, you can do all of your studying, you can do all your research, and then the trade's going to take like anywhere from all day to maybe a few days to form up. So kind of like this trade that I showed you earlier on the screen, I had to sit there, I didn't really have to sit there, but I had to kind of check every so often, and starting at say 8:30 and enter the trade 2-3 hours later. Well, in this case, you see it the night before, or you see it that day and it hits the next day, or, you see it forming up overnight or whatever, right? It's just a much longer time frame to where if you have a job, you can kind of you can check in later kind of thing. It's a nice deal. So that's more what I think we're geared towards doing, but the mechanics are essentially the same for most trading algorithms, especially if you're using indicators. However, you have to test on whatever time frame you're going to trade. So, if let's just say you're, testing on a low time frame, you're doing day trading, you test your algorithm on day trading, and then you go ahead and start trading that same method on a higher time frame. Like say right now it's on the 30-minute, let's say you just decide to do this on a 4-hour time frame. So, for example, the price action you're looking at is on the 30-minute. So every single one of these bars is 30 minutes worth of price action, right? It tells a story of what price did over a 30-minute period. And we have training that talks about how a candlestick works and all that kind of stuff. That's all stuff we could do in a beginner class. I could dedicate a class to what's a candlestick. But here, if I go to the 4-hour time frame, and I'm going to not do that way. I'm going to go just to the 3-hour, so I don't screw up my system. So now what we're looking at is it all looks the same. We have candlesticks, right? And they all do kind of the same thing. However, the thing is that each of these candlesticks is 3 hours worth of price action. So this tells the story of what happens to a candle in 3 hours. And the way that price behaves on a 3-hour time frame is going to be very different. Well, it's at least going to be somewhat different to the way that price behaves on a 30-minute time frame. And what I've done over the past 2 years is develop a few algorithms that actually trade across time frames, so that they're pretty consistent across time frames, across assets. The assets do have their own kind of quirks, so you do have to, it's never going to be the same. But my attempt was to find kind of a unifying method to where I could, go to a different asset and not have to do the testing would reveal the same kind of price action and stuff. So try to keep things as like plug and play as possible. So far though, it seems like we're not getting a lot of questions right now. Again, there's only a handful of people. So this is a new show and everything like that. But, if you are going to come in live, then do us a favor and ask questions, have questions ready to go. We can answer them. This is free right now. It's amazing stuff. Trev has a question over in our Telegram. He says, I was curious about geometric patterns. Briefly covered yesterday. My specific query was along the theme of market maker theory and structure. Do enough traders follow them to form anything useful? Yes, Trevor, they do. Different patterns have different levels of success. So, for example, like a head and shoulders pattern is going to have a pretty decent level of success. Most of where I've traded a head and shoulders is going to have somewhere along a 80% or higher rate of success. It's a really good pattern. I'm trying to look for one on the chart right now to show you. But the patterns are not successful because traders follow them. I mean, that's probably true. There's going to be some self-fulfilling prophecy, like, oh, that's head and shoulders, we got to go short like that. There's truth to that. But the reason patterns happen is because they're telling a story. For example, this is a double bottom right here. Okay, so that's more of a candlestick theory. It's a pattern. So I'll just draw a head and shoulders since there's nothing clearly available here. And then we'll go to we'll probably end the beginner show. So a head and shoulder is going to look like this. Find my... So what happens is, and this is a head and shoulders reversal pattern, and it's a head and shoulders top. And so price heads up. The bulls are kind of pushing upwards, and then the bears kick in, right? And then the bulls push a little farther because they're not done yet, but then the bears kick in and take it all the way back down here. And then the bulls kick in again at that, they're defending that line, but the bears actually kick in sooner, and then price tends to fall from there. And then there's a measurable way to trade this. You would have to be doing what's called going short. You would have to be, for lack of a better word, betting that price is going to go down. So you would enter a trade, price would head down to certain measured levels. And then if price went up, then you would get out at the top of this blue box. If price went down, then you would exit the trade at the bottom of the green box. And in this case, the risk to reward ratio, as you can see on here, is 2.5. So that means that if you were to risk $100, you're making $250. Or if you risk $1,000, you're making $2,500. That's just, I'm just drawing this. I mean, it's probably going to be more like 1.5 to 1. It depends on how you're trading it and how you measure your stop losses and stuff like that. But Head and Shoulders works because it tells the story where the bulls kind of like they overextend right here. The bears are kind of like they're waiting, right? They're strong and they know they're strong, but the bulls don't know how strong the bears are, so they overextend. And then the bears really take advantage of the bulls that got way too tired here and they kick it back down. So, that's kind of the story that happens here with price, and that's why Head and Shoulders is so valuable. So it's not so much what the, it's not as much like, I don't know. I don't know what the mix is. There's going to be a mix of the story I just told, and then there's also the fact that people see these patterns now and they trade them. That's a thing. That self-fulfilling prophecy is a reality too. So there's a lot of debate in the trading community as to how much of that is, due to the actual price action, how much of that's self-fulfilling. But I'd say certainly on a higher time frame, it's going to be, in my opinion, more, more of the story that the price tells as opposed to people simply trading it. Lower time frame could be a different story. It doesn't take as many people to just make decisions that change the market. So I hope that helps. I hope that answers the question, and I hope it wasn't too advanced for the beginner course, but we do appreciate it. Aaron, thank you for your comment. Aaron over at YouTube, thanks for that. And we're going to go ahead and end the beginner course. Elliott Wave. Trev's asking about Elliott Wave. I'll answer that in the.
I haven't heard Elliott Wave in like 20 years, but go ahead.
Oh, dude, that's still big. People.
I know. I haven't heard that in like 20 years, but go ahead.
Oh no, it's Elliott Wave's. People like it. I don't know if that's like. Again, I'm sure that there is more of a technical component. I'm sure there's more of a it's just they determine the price moves in waves. And those waves have been consistent, and there are some really good traders that will always trade that. And the question is going to be, is that because like people see the Elliott Wave and then they trade it like, oh, it's right here, we got to go short because that's where the Elliott Wave will normally go short. And that's the question. Is it trading nature? The same thing could be about Fibonacci levels. So Fibonacci levels, you can look that up, but people wonder, is that a self-fulfilling prophecy that people just go short at the 1.618? So anyway, that's getting into a little bit out of the beginner course. So for now, go to algofactory.tech. I'm going to put that in the chat. So head over there. You can email us. Go to contact us if you have questions. Before you sign up or anything like that. Just if you have questions, email us. One of us will get back to you. One of our team, might be myself, that does that, and we'll answer your questions. And just come. We're doing this every day. You can either catch us on the review. This is up on YouTube. It's free for everybody. And come in live, talk to us. We like that. So it's a pretty amazing free resource that we're giving out here. So, all right. Well, V, take us away.
Folks, again. What?
Go ahead.
Oh, folks, thank you all for joining us. If you're not a member, join. Start making some effort into exploiting one of the few exploits you have as an American citizen. So join algofactory.tech. Let's make it happen.